Thank you for joining us, and thank you for being in the audience. We appreciate it. So we're going to talk about risk mitigation with this panel. Again, I'm Thomas Miller with PNC Bank. I work as Managing Director for Corporate Foreign Exchange at PNC. I'm here in the Indianapolis office. I'll not be speaking regarding foreign exchange today. I'm leaving that to my distinguished colleague, Katie Rodgers. She'll be part of the panel today. And then we also have Kathy Kebo, and Ellen House joining us. So we're going to start with Kathy. Kathy is with Gregory Appel. She joined Gregory Appel in 2015 and serves as Senior Risk Advisor. Her areas of expertise include international manufacturing and construction. Kathy's extensive risk management career spans multiple roles and achievements in global brokerages, from being a leading producer to an area vice president and launching a successful Japanese business division. In 2005, Kathy founded and served as president of Global Insurance Managers, which specialized in international business operations and was later acquired by a global brokerage. Kathy has been involved with RIMS, which is the Risk and Insurance Management Society of Indiana, and JASI, which is the Japan America Society of Indiana, for many years, and Kathy is a certified construction risk specialist. So Kathy is going to give about a 15-minute presentation, and then I'll introduce the next speaker. Thanks.
Good morning. As Tom mentioned, I'm here to talk about considerations when you're doing business abroad from an insurance perspective. Have any of you ever found yourself in a foreign city in the wrong part of town? So I had that experience too. I was at a conference in Prague, and I was told about an area of town to avoid, and somehow I miscommunicated my address to the taxi driver and found myself in that very area. It had a good end. The story had a good end because I went into a nice little restaurant with good people, and they helped me find the place where I needed to go. But typically, the first exposure that crops up is having employees, before you start really doing business abroad, travel to foreign countries. And there are some things to think about when you're doing that. Depending on the country, there may be a difference in healthcare quality. There may be, you may be renting a car and driving a car in a foreign country. So those are the kind of things that we need to think about. When driving a car, well, let me just back up. If you're thinking about doing international business, really need to look at getting a small international package policy, which is fairly low cost. And the reasons for that are that you have certain coverage that is included that will really help you. The basic general liability policy with products liability, the coverage territory is only the United States, its territories, and Canada. So a lot of people think, well, I have a products liability policy, I'm covered no matter where I sell my products. Not really true. You really need to have that international, global coverage for your policy. If you get sued in another country or something like that, you really need to have that coverage in place. Then regarding workers' compensation laws vary by state in the United States. And what we really are looking at, some states you could actually travel on a limited basis and maybe get some coverage that way, but it's really safer to get what we call foreign voluntary compensation coverage, and that provides benefits for the state of hire in that while you're traveling abroad, regardless of what country it is. So that's something I think that's important, because then you can get loss of income, all kinds of things. Also, you can get endemic disease coverage. So something that wouldn't maybe even be covered in the United States could be covered if you're traveling internationally. I think one of the examples was given, an insect bite. If you're in a tropical area, that if you get bitten by a mosquito while you're in the United States, off duty, of your work that's not going to be obviously picked up by workers' compensation. So there are just some things that also repatriation coverage. If you're in a country which Europe isn't really, there may be a few Eastern European countries where you're not comfortable with the health care. If it's not adequate health care, you can get moved back to the United States for health care. So those are kind of considerations. And then regarding renting a car, you think about, well, maybe I've got coverage, maybe I don't, what do we do? If you have that foreign package policy, which is, again, not very expensive, now what you would do is buy the coverage, the liability coverage, from the rental car company. Also buy the comprehensive and buy the collision from the rental car company. But you can buy it at the minimum compulsory limits in that particular country. And then your foreign package will extend over that, up to probably $1 million limit. And then if you have an umbrella over that, but we won't go into that just this moment. So that's how that works. That's what you need to do, and then you'd have to inform your employees, hey, here's what you do. But the other great thing about this package policy is that you have a card, a little ID card with you with a phone number on it. So if something happens, you can get taken care of. There are also some executive assistance services. So if you happen to lose your passport or something of that nature, I always found it's a secure feeling for me to have that little card in my wallet. So that's something else that you can, that is covered under that. There's some minimal property coverage, but and a little bit of travel accident coverage, usually low limits, and kidnap and ransom, again, which that I frankly have not seen come up with any of our clients, but it can happen. So that's something, and at a very nominal price you can get that coverage. If you're really getting into the position of actually starting an operation or purchasing an operation in a foreign country, if you actually get to the position where you have a foreign location, you started up an office, or you've started up a manufacturing operation in another country, well then you want a different type of policy that is a little bit more extensive. And I believe, especially if you have multiple countries involved, the best thing to do is to get a controlled master program. And what that means is that you as the parent company are controlling the insurance program for all of the countries in which you do business. And the great thing about that is you can get English version policies, an English version policy summary. You can avoid gaps in coverage. You can bring up the insurance coverage to more like US standards. And so you can have a great understanding of that. Now, what I always recommend, I feel better about, is that if you have a location in another country, I think a local broker is needed. There are some countries which allow non-admitted insurance coverage, but I would prefer to have a local policy and a local broker so that if you have a claim situation or an engineering type problem that you need help with, the best thing you can do is have somebody locally. And you choose a partner who is going to cooperate and communicate not only with the parent company, but with the parent company's broker. And that way you can have a cohesive program. We had a situation with a client who had an operation in the Netherlands. And we had a local broker involved who was very good, but then the company got fragmented. Part of it got sold off, and it was just, things changed. And it wasn't working out for the client's local operation anymore. So we assisted by interviewing other brokers, kind of an RFQ, and to help them find someone to make certain that they were qualified, that they have the claim service that's needed, they're able to review contracts, they're able to help with engineering issues with the insurance companies, and find somebody who would actually help them. So we were able to do that, but it's important just to find the right partner. So I think what happens with that is the parent company's broker shares revenue, significant, much of the revenue with that local broker, but it's worthwhile for the client to have that local service. So that's my thought. And then you have considerations in different countries like UK. Now, most countries in the world do not have a workers' compensation system like ours in the United States. Most of them have it, a government, it's provided, the program's provided through the government. You pay in certain taxes or whatever, and you get medical, that's also true of group health, medical insurance, through the government. So what we recommend in those situations, basically you buy coverage locally. In the UK, they have a different system. And I quite honestly can't describe it to you in detail, but their system is such that employees, when they get injured, end up suing the employer very often. And so while you're not purchasing, you don't need to purchase workers' compensation, you do need, I believe it's compulsory, you need to purchase employer's liability so that you can defend those lawsuits and pay out with those lawsuits. So that's a unique thing in England. And I know that some other countries have some other unusual situations, like you're required, if you have a fire, you might be required to pay the employees. So here it's optional. So in the United States, if you have a fire, your buildings, you're shut down, the operations are done, you can choose to buy business interruption coverage that includes ordinary payroll for the plant workers, or you can or not include it. It's a choice. In another European country, that might not be a choice. You may be required to continue to pay them. And so you need to have insurance coverage in place so that can happen. If you don't, it's not a good situation for you because you're obligated to pay anyway. So there are just a lot of different considerations. Also, because litigation is less, and David could speak to that, is less in Europe than it is, well, in any place in the world pretty much than it is in the United States, the insurance costs are a little lower. So that's one blessing of doing business internationally, is that especially the liability insurance costs are not quite as high for those other countries. Now, Germany is trying to catch up a little bit. They are having more litigation, especially around directors and officers' liability. And then Germany also has its unique concerns in that they're very conscious of environmental liability. So one of those things, one of those areas, sometimes I believe it's compulsory for certain types of operation that you carry pollution liability, environmental liability coverage. So it's just something, just a lot of different nuances to think about. In terms of just overall risk mitigation, we had a situation with a client. Now, this wasn't in Europe, but it was in Mexico. She was an accountant, and she was walking from her car into the building, the facility, the client's facility. And she had a briefcase, which had a laptop, and she was carrying it into there. As she was walking through the parking lot, a motorcyclist came zipping up and tried to grab her briefcase away from her. Well, she hung on to it, which she should have just let go. What if he had a weapon? And she was lucky. She got away with just some scraped knees and scraped hands because he went on. But some people might not go on. And in Mexico is one of the highest risk countries right now for injury potential. Kidnap and ransom is a big issue in Mexico. Other high-risk areas, and again, Western Europe, not so much, and Europe, not so much, but the Middle East, certain countries in Africa, and you can actually check this out. At least from an insurance perspective, we can check that out for you and tell you which countries are the highest risk. So I've just mentioned that. One other thing related to travel is that sometimes executives may want to if they're just traveling for a sales trip or some meetings, they might want to tack on some pleasure travel to that, you better check with your policy to make certain that that's covered, that you're covered for that exposure. Because policies, there are no standard policies for this international package. And so you might want to check that out in advance and make certain that you have coverage. Regarding employee benefits, that's an area where, because local employees are covered under, the local governmental scheme, you will want to get some international medical insurance coverage for those employees that are maybe coming from the United States and on temporary or even permanent assignment in another country. So there are a lot of considerations there as well. So I've used up my time.
We'll move on to Ellen House. So Ellen joins us today from the Office of Europe at the U.S. Department of Commerce's International Trade Administration in Washington, D.C. Ellen has served as Acting Director of Western and Northern Europe since January of 2017, and she oversees a team of trade specialists that work to support U.S. trade policy goals, ensure fair market access for U.S. companies, promote U.S. exports, and protect U.S. commercial interests in 18 countries within that region. She works closely with the Commerce Department's offices in Europe, as well as with Commerce's domestic offices, including the one here in Indianapolis. She previously also worked as the Commerce Desk Officer for Russia, the Caucasus, and Central Asia, as well as for the former U.S. government technical assistance program that assisted U.S. companies seeking to do business in 12 former Soviet republics. Ms. House holds an MA in International Relations from the American University in Washington, D.C., and a BA from the University of Michigan, Ann Arbor. Ellen is going to talk to you today about understanding how Brussels can impact your business in Europe.
Thank you. And I just wanted to thank the organizers for inviting me. It's nice to get out of Washington, even for a day. As Tom mentioned, I'm going to talk today about understanding how Brussels can impact your business in Europe. And what I mean by that is I'm going to talk about the regulatory context of trying to do business in Europe. Europe is a very highly regulated market, and the rules are mainly set by the EU institutions in Europe. So U.S. companies that are doing business in Europe or seeking to do business in Europe really need to be aware of the EU legislative developments that are relevant to their product or service, and they in order to make sure that they don't risk being out of compliance and running into problems for those reasons. I also mentioned that even the EU legislation that's set in Brussels and covers the 28 countries of the EU also tends to impact some of the other countries in Europe that aren't European Union members. So Norway and Switzerland and others that aren't EU members also tend to adopt EU legislation pretty closely. In addition, the EU tends to try to push its regulatory framework on neighboring countries that it has close relationships with. So you'll find that regulations in Europe often apply also in places like Turkey, in Ukraine, because EU provides technical assistance or has a customs relationship with these countries, and they ask them to adopt the same regulations. So it's even wider than the EU. So for my presentation today, I won't give too much information about the transatlantic relationship, because I know we heard about that already, but I'll mention that a little bit. And then I'm going to just touch briefly, very briefly, on three regulatory areas. The General Data Protection Regulation, which is a new one, and CE marking, and REACH, which is chemical regulation. And then I'll suggest some resources and things to help your company to comply. So, well, some of the Indiana, here's some figures about transatlantic commerce. I also had some Indiana figures, but I stole those from the state, so you've already seen them. Why do business in Europe? This is an essential market and partner for the U.S. This is our biggest trade and investment relationship. These are rich countries with a strong rule of law, and they're sophisticated consumers. So it's a very key market for us. The US and Europe together account for 1/3 of global GDP and 51% of global personal consumption. We're each other's largest trading partners and the largest sources and destination for investment. So even though there's a lot of attention paid to emerging markets, and of course there's a lot of opportunities in those places, the sort of current trade and investment relationships that the U.S. have are mostly, frankly, centered around Europe. So there's a lot of history there. I think Andrea from Indiana mentioned that as well, that there's a lot of existing relationships between this state and the rest of the U.S. and European countries, and those are something that you can build on. So that's one of the reasons to look at that market. Again, I'm not going to mention too much more about Indiana, though I have to say that when I flew in yesterday, I noticed that there was a model of the Eiffel Tower in your airport, and that's because today they're inaugurating a direct flight between Indianapolis and Paris, and that's what the trade mission folks are flying out on. So that's a great connection and a new way for you to get to Europe. And I also, I guess it was already mentioned, but Commerce Department has offices in, I think, about 20 countries in Europe, and that I work closely with, and I know Mark, my colleague here in Indianapolis, works closely with, and I do understand that those offices are assisting the state delegations in various ways in their events and their meetings in Europe. So they're a resource for them and for you. And I'm sure that Mark also played a role at his end here in helping that delegation. Now on to the regulations. So Europe, as I said, is much more highly regulated than the U.S. The safety, environmental, health, and privacy regulations are much more stringent there, and they can be very difficult and expensive to comply with. Something like 80% of products are covered by mandatory EU legislation, and now with some new legislation, services and activities over the internet are also going to be subject to new rules. And it's not simple or easy to figure out which products are covered and how to comply. We have Commerce has an office in Brussels that's mainly focused on following EU legislative developments. So they are doing that in part for two reasons. They're looking at legislation and regulations that are being developed and trying to influence how they're being developed in order to try to mitigate the impact on U.S. companies. So we're getting involved on advocating and helping to try to shape the legislation to make sure that it doesn't keep U.S. products and services out of the market. But they're also keeping close track so that they can try to advise U.S. companies on how to comply once the legislation is complete. So the three regulations that I'm going to touch on today are just the tip of the iceberg. There's, of course, many, many more that are out there, but this is just try to illustrate what a big issue this is and how complex it is. Okay. So GDPR, the General Data Protection Regulation, is the newest and kind of most overarching of the regulations I'm going to talk about today. This is becoming effective next week, and it was a long time coming. So the focus of this, so theoretically all companies are supposed to be in compliance as of May 25th. So this is privacy legislation, and the purpose is to give European consumers control over their personal data. You might have noticed in the last couple months, if you're looking at a website in Europe, that there pops up a thing asking you to opt in to them collecting your data, like the cookie stuff that used to come up. That's probably coming up more and more, and it'll start coming up with US sites too. This is in part related to this new legislation. This legislation applies across all sectors and to companies of all sizes, regardless of whether or not the company has a physical presence in Europe. So this is extraterritorial legislation. That means it affects companies and entities outside of Europe, even though it's a European regulation. And there's a lot of new requirements for organizations that were not covered under previous EU legislation, even though this regulation is essentially kind of updating the data protection regulation that the EU had before. The other difference with this regulation is that the fines are very high. So you could be fined for non-compliance of up to 4% of the annual worldwide revenue of your company, or up to 20 million euros. That piece is focused more on large companies, but the fines are real. And so that's a big piece of the risk of non-compliance. This legislation requires businesses to tell consumers, one, that they're collecting their personal data, what they intend to use the data for, and to whom the data will be disclosed. So that goes beyond what we require here, and we don't have a kind of broad privacy regulation here. Also, the GDPR uses broad definitions of personal data. So personal data can be any kind of personally identifiable information. That includes your email address or your tax identification number. So it's pretty basic stuff. And also the concept of whether a company is processing the personal data that they're collecting includes whether you're collecting the data, recording it, storing it, or transferring it. So there's a lot of, it covers a lot of stuff. So a question for you to ask, some questions for you to ask in order to determine whether this applies to your company or not include simply, do you have customers, clients, or employees in Europe? And are you interested in selling to customers in Europe in the future? So if you're doing business in Europe, it could affect you. Our office is recommending that companies start looking at how to comply now. Obviously, it's a little bit late, but nonetheless, and that you seek legal counsel in order to do that. So this slide, I'm not really going to talk about this slide. This is part of a longer presentation that a colleague of mine in Brussels gives regularly. And in fact, she did along with some other colleagues, did 2 road shows across the US where she went to, I think, more than a dozen cities in order to do a much longer presentation for US companies on what this legislation is and how they need to comply. So we have a lot of additional information for you to consider, reports and other things to try to figure out whether this relates to you and how do you need to address it. And in fact, I would mention that my colleague that I just mentioned is going to do a webinar on next week on May 22nd, and where she will explain this slide. And I'd be happy to give anybody the information on how they can participate in that and get the more full information about what this is. Because there's a lot of concerns about this. In fact, this legislation affects also not just companies, but the US government has a lot of organizations and programs where we collect data from people in Europe, and we're also trying to figure out how to ensure that those programs can move forward. All right. So I'll move on to CE marking. The CE mark is a mark on a product is the manufacturer's declaration that the product meets the applicable safety, health, and environmental requirements outlined in the appropriate European product legislation and has undergone the relevant conformity assessment procedures. So this is something that goes on most products that are for sale in the EU, but not all of them. So it doesn't have to go on every product. But there isn't, in fact, there isn't a comprehensive list that you can just turn to say, I have a product, I need to see if it needs a CE mark. Basically, there's a long list of legislation, of directives on with health and safety requirements, and you need to basically figure out if your product relates to one of these regulations. So if one of the regulations includes your product, then you need to get a CE mark. So just determining whether you need one or not is part of the battle. But under the CE marking process, there's responsibilities for manufacturers, for importers, and for distributors. This regulation has been around for a long time, so many of you perhaps have heard of it already. Some of your companies might already have a CE mark. I won't go into too much detail on this. I just wanted to flag that this process is an important one for U.S. companies, for U.S. exporters of products to consider if you want to do business in the EU. Again, this slide is from a longer presentation that one of my colleagues does who regularly comes around and does presentations for U.S. companies across the U.S. on how to deal with CE marking. So again, I have more information and resources to share on this if you're interested. And we have experts again. I have a colleague in DC who mostly kind of works on helping U.S. companies with these issues. And we have colleagues in Brussels too that can help. REACH. So this is the chemical legislation that I mentioned, sort of an oxymoron to say REACH in simple terms because it's not simple legislation, which you can kind of see a little bit from the slide. This is the regulation that governs the manufacture and import of chemical substances, but it doesn't just apply to chemicals because it also applies to chemicals that are in products. So this legislation has also been around for a while. It's been in force since 2007. The goal of REACH is to improve the protection of human health and the environment from the risks that can be posed by chemicals. And a key thing to keep in mind is, in principle, REACH applies to all chemical substances. So not just those used in industrial processes, but in our day-to-day lives. So in cleaning products, paints, articles of clothing, furniture, electrical appliances. So in some instances, finished products that incorporate certain chemicals must be registered. And so this regulation actually has an impact on most companies across the EU that are selling something, some sort of product. And another important aspect of REACH is that it places the burden of proof on companies. So there's a lot of complex things to deal with in terms of complying with this regulation. You have to identify and manage the risks of the substances that you manufacture and send or that are included in your products. And then you have to demonstrate to the European Chemicals Agency that you're in compliance. And again, there's lots of additional information that we at Commerce have that we can share to help you try to figure out how to make sure that you're in compliance with this regulation. So this is just a couple resources. This is the link to our site, our general site, our site in Europe, and the site in Europe will link you to the offices in individual countries if you want to see who's there and what kind of market research they have, and our staff. Privacy Shield, which I didn't explain, but that's an agreement that between the US and the EU that allows for the transfer of personal data between the US and the EU, which is necessary because the way the US and the EU regulate privacy and personal data are so different that we had to come up with this framework agreement for the EU to agree to allow any of their data out of the EU and into the US. And so that's actually one of the ways that you can try to comply with the General Data Protection Regulation is to be part of the Privacy Shield, which is sort of a self-regulating procedure, but requires you to just follow some rules and some standard procedures in how you deal with data. But basically, I mean, the key message that I have today is that regulations are complying with regulations are a big risk, are a big part of doing business in Europe. But we're here to help you by providing the information that you need and helping you personally and with other. And Mark is right over there, and myself as well. Mark is really your kind of first line of contact, obviously, here in Indiana, and he can connect you to everybody that's relevant. Thanks.
Great. Okay, Ellen, thanks. And then we'll move on to our final panelist, Katie Rodgers, who is part of our PNC Bank's foreign exchange team. She's actually an Indianapolis native and a graduate from the IU Kelley School in 2013. She started with PNC shortly after she graduated from IU, and she's currently an associate director of foreign exchange serving the Chicagoland market. Katie spends the majority of her time educating and consulting clients in managing foreign currency risk in the international markets. She's currently getting her MBA at Northwestern University in Kellogg. She's a busy lady. So I will hand over the podium to Katie.
Perfect. Thank you, Tom. And thank you all. Good morning. It's nice to be back amongst Kelley folk again. What I do all day long is I look at businesses, especially smaller to mid-sized businesses who either don't have experience internationally or just kind of getting into an international marketplace. A lot of the companies I work with are privately held companies who are kind of my grandfather started the company 70 years ago, and we've kind of grown and expanded, and we're out of room here in the US. We've done really well. Now what do we do? And so I'll help a company kind of take a look at what are the risks internationally, what do you need to think about going forward, and you've spent all this time researching a product, you spent all this time, getting the insurance to get there, getting the regulations so you can sell into the market. Now how do I make the money and get the money back from Europe? So that's kind of where my main focus is. So that's kind of where all of the risk comes into play, is getting the money and getting it priced appropriately so you can actually sell the product. It's amazing to me how many companies I deal with that have done all this research, have done all their due diligence, have spent all the money invested, and then want to price their product in US dollars and can't figure out why nobody wants to buy a product that is either 20% more expensive than the competition, or their customers just don't want to deal with figuring out how to get the dollars to them. Whatever the case may be, there's lots of different issues that come around pricing in foreign currency and doing those things, even though a lot of US companies are scared. They're scared of currency because it's not, what their balance sheet is based off of. They're scared that they're not going to understand how to price it and the volatility in the market. But the beauty of that fact is having a relationship with a banking institution gives you the tools that you need in order to be able to mitigate a lot of that risk. There is always going to be risk, payment risk, transaction risk, all of these things in an international transaction, whether that be in US dollars, euros, Chinese renminbi, whatever the case may be. But the nice part about it is there are tools and there's ways around it. So you're obviously all here because you care about Europe in some form or fashion, whether from an academic, an economic, or a business standpoint. So this slide is a little redundant just for giving everybody here, but it kind of outlines a little bit of what types of things you need to think about and why this is actually something that you should consider in a business, rather than just kind of brushing it off and saying, I just deal in dollars and that's what I need to do. So what we've got going on in the marketplace is Europe is a huge part of the global economy, as you all are well aware. About 31% of transactions are done in euros in some form or fashion in the global marketplace. The US dollar is obviously the huge component to that. That's 80% of the market. And yes, for you math folks, I know that those don't add up. That's over 100%, and there's some other currencies in there. But you got to remember there's always two sides to every transaction, and so the numbers don't add up to 100%. I realize that I promise that math is a strong suit of mine. But there's always two sides to the transaction, so the US dollar is on at least one side of 80% of all global transactions, and the euro even though it's not the largest global or the largest in size and space, it is 31% of all transactions globally. So there's a lot of movement in that currency, a lot of movement in the dollar, which provides a lot of opportunity to businesses in order to mitigate that risk. So speaking of risk and kind of the things that we've talked about, I won't get into any market conditions. I know Bill and Andrea did a very nice job of doing that in the presentation prior, so I won't get into too much of that. But you do have some additional economic information on your table that gives you a little bit more of kind of what Bill put all of this together. I can't take credit for this. Bill put all of this together, and so you've got a little bit more information kind of on what we expect as a bank going forward in the global marketplace and kind of an exchange rate perspective, as well as some economic information. But what I want to mostly focus on is kind of transactional risk, translation risk, and then we can get a little bit into contingent risk. So transactional risk has a lot to do with the counterparty you're dealing with. It has a lot to do with the way you price your products and services. It has a lot to do the way you do to collect those payments. So there's a lot of components to that go into it, and that's something that we can kind of help with. We can't necessarily always help with kind of the counterparties you select, but there are banking products kind of help mitigate that credit risk of whether or not that counterparty is going to be able to pay you in the future. There's certain products that we call trade letters of credit and things like that we can get into that kind of help mask some of that counterparty risk and some of that issue of collecting payment from a new, supplier in Europe or a new customer in Europe that you're not entirely sure is going to actually get you the product that you paid for or the funds for the product you sold to. But we'll get into some kind of mitigating factors on that. Some of the translation stuff is obviously my area of expertise. A lot of companies, especially if you've got operations in Europe, you have to make sure that all of those operations are translated into US dollars, so converted into US dollars in some mathematical way to make sure that those are all in US dollars on your dollar balance sheet. That's what your accountants like to see. I'm sure some of the accountants in the room will get to that a little bit later, but all accountants want to see everything in dollars on the balance sheet because that's where most of your stakeholders are probably going to be in the US if you're a US company. And that's where they're going to see the value of the company. So ways to do that is you can have a European operation that's humming along, that's producing 3 to 5% growth every year, and everything is fantastic. And then you've got a situation like we experienced with the euro last year, where it lost about 20% in value, and now your operations have lost 20% in value on your US dollar balance sheet. And there's not a lot that you can do about that unless you're thinking about it in advance. So these are a lot of things that we see. I'm sure you've seen in earnings reports that have come out. Companies are really struggling with translation exposure and translation losses. That doesn't mean that they lost money in Europe necessarily. That doesn't mean that their products aren't as competitive in the global marketplace. That just means that on a translation basis, from what that value is in Europe to what that value is in the US is always fluctuating and it's always changing. And these are things that we talk about with clients and prospects to make sure that they're understanding that there are ways to kind of get around these things and focus on them from a strategic perspective rather than kind of worrying about them when the accountant comes back and says you've got a $400 million translation loss and you're like, I don't understand what that means. So things to kind of think about when you're going into these transactions, as well as some contingency risk. So I know there's a lot of bidding going on for international contracts. There's a lot of competition out there. One of the ways to do that is to make yourself price competitively by pricing in the local currency. So euros in this example, or it could be Swedish krona, or it could be something else in the marketplace. Everything is not in euros in the Eurozone. And so what's going on there is you can kind of think about those things strategically, price yourself in a way that's going to win the contract, but then protect yourself on the back end that if you do win that contract, you can actually fulfill it at that price and you're not going to lose money because you tried to price it based on US dollars, you tried to base on an exchange rate that you're just not going to be able to maintain in the marketplace. One of the other things that I didn't really put on here because it didn't really fit into one of my buckets, but payment fraud is also a huge topic that we see at the bank all the time. We've had a couple instances of attempted fraud. Luckily, it was stopped before any money went out the door. But we see a lot of attempted fraud now where hackers are able to kind of mimic your email address or the style in which you send emails. And we at the bank will get those emails and we'll try to act upon those as, we're trying to do best for our client, but then we'll notice a typo, or we'll notice that is PNC, but it's now PMC in your email address, or you asked for a currency that you don't normally ask for, you asked for settlement instructions that are different than your normal settlement instructions. We had this with one of Tom's customers actually very recently, where it looked like an email that came from one of our customers that we deal with all the time, and they were asking to send some Chinese renminbi out the door, and we said, this doesn't make sense for what you're trying to do. And we found that it was a fraud attempt, and we called the customer and figured it out. So having that direct line into your bank and having that relationship with your bank is huge in helping to prevent some of these measures. Going online and doing a lot of these payments online, while I know there's a lot of risk associated with online payments, it's actually more secure doing an online payment, especially with a financial institution, because you've got that two-factor authentication. I know PNC as a bank has put a lot of money and effort into mitigating those types of risk and making sure that we protect our platform so that your money is protected. So there's lots of ways around fraud, and I can definitely get into a little bit more of that. While I'm not an expert, but we do have, PNC even has links into the FBI, and we've got some mitigation things we can talk about on that end. But getting into kind of how do you assess your foreign risk? How do you put framework around it? This is a really simple framework that we've taught to a lot of clients who are kind of getting into this space. Kind of identifying what are your risks, what is going on in your business that would identify an international exposure. Are you selling into Europe? Are you buying from Europe? Do you have operations in Europe? It could be as simple as I'm a fully domestic company that's not doing anything in Europe, not doing anything abroad, but you've got European competition, more than likely. It's very unlikely that you don't have any kind of foreign competition, even if you're just a fully US domestic company. So those are kinds of things we kind of start and consider. And then we assess kind of the risk. What is your risk tolerance? And I know that's kind of a scary thing to think about, especially when you think of the financial crisis and your 401k and all these things. Like, I'm not really ready to take on any risk. Well, by doing business, you're taking on a little bit of risk. So you're obviously okay with at least a little bit of risk. That's why you've got Kathy here to mitigate most of that, personal risk, and you've got Ellen to mitigate your regulatory risk. So you're willing to take on a little bit, but there are tools to kind of figure that out. And then we kind of design the strategy around that, and how do we do that, and how do we mitigate those risks for you so that you're not too worried about the exchange rate risk going forward. You're not too worried about that counterparty risk. And then we kind of measure it and we track it and we see, okay, is this working? Is this not working? Is this setting your expectations for your budget rate? Is this kind of going over under? Are you misestimating? What's going on here? And so that's kind of the piece that's usually most missed. Usually people invest a lot of time, if they're going to invest the time, in kind of measuring and figuring things out. And then all of a sudden they put the hedge into place and they don't think about it anymore. And they don't realize that, you can kind of track those things and we kind of tweak things so that they go more smoothly going forward. So part of our hedging services product, and I know hedging is kind of a dirty word nowadays, but we'll call it risk management tools if that makes you feel a little bit better. But basically, these are types of products that you can implement into your business or your business strategy in order to make sure that all of that risk is taken care of for you. The simplest one is a forward contract. So some of you may be familiar with forwards or futures. Forwards are very simple, in which you lock into an exchange rate today for some point in the future. It doesn't get much more simple than that unless you're just sending a payment today. A lot of companies, even smaller companies, I've dealt with companies that are $500,000 in revenue annually that are doing, that are thinking about these types of things, that have thought about these types of contracts. So this isn't necessarily for the large multinational publicly traded company. These are very accessible to smaller businesses. So a lot of you that are dealing with kind of those business relationships, trying to garner more international relationships here in Indiana, these are the types of things that these companies can think about, and they're very accessible to those companies. We can get even more complicated. We can get into options. We can get into kind of loans. in foreign currency and doing it that way. But a majority of the time that I spend, and actually a majority of the time that even our large multinationals are kind of in this forward contract bucket, just because it's a very simple product, it's very easy to understand, it's very easy to explain to shareholders, it's very easy to implement, and it's something that your bank can help you with, making sure that it's on track and in line and making sure that it's actually helping your business. So just to kind of give you a sense of what this looks like. So this is just a view of the euro over the last 8 years. You can see it's going up and down, it's going all over the place. How do you kind of manage that for your business? The orange line there is a strategy where you've implemented forward contracts in order to mitigate that risk. So while you're obviously not sticking it, one rate across 10 years, that's not feasible for your business. It's not competitive for your business either. You mitigate a lot of those highs and lows and you kind of smooth that out over time. And that's been really effective for companies, not only from a pricing perspective, but from a budget perspective. If you can understand in advance what your exchange rates are going to be, you're a lot more competitive in the marketplace, and you're a lot more attuned into kind of how you're going to meet future obligations going forward. So it's a great talking point for shareholders, for the president of the company, or if you are the president of the company, trying to figure out how to articulate that and how to make sure that your business is thinking about these things going forward. So I know that was a lot of information, especially from all three of us. So I want to make sure that we leave enough time for everyone to kind of ask some questions. I know we're talking about three very different topics, but that's why we're here, and that's why hopefully this will have been really valuable for you. So with that, I'll turn it back over to Tom to kind of facilitate Q&A.
So we have about a little over 10 minutes. As before, if you do have questions, please step up to the microphone in the middle of the room. All right, Ellen, could you just take a moment to tell us how Indiana companies find out about the full gamut of regulations that might apply if they want to sell their product or service in the EU?
I was going to say ask Mark, but that wouldn't be fair. I guess I think I sort of covered that. I mean, really, you would probably start by looking at our Europe website, and I mean, it would depend a lot, obviously, on what it was you're selling and on the nature of your business, on whether you're trying to open an office there, whether you're trying to sell a product, whether you're selling the product online, or whether you have a distributor. I mean, all of those kinds of differences. We have, as I said, we have folks that would be happy to talk to you about how to go about determining what regulations are relevant to you. So again, I would say call Mark, and he'll find you the right person to talk to. That's the answer to all my questions.
Oh, no. Were you traveling on business, or was this a personal vacation? It was business. So several things to look at there, but that foreign voluntary compensation would be a big benefit in a situation like that. So they would help you find the medical care that you needed. And the insurance company or their designees, but one of the things in your situation, I don't know how sick you were, but if you were dangerously ill, of course they get you stabilized first, but they may want to transfer you to someplace else with better medical care, and probably the United States. And it's similar to a woman. Now, she was traveling on personal, and she had bought some travel insurance. She became very ill on a cruise ship off the coast of South America. And that particular country didn't have the quality of medical care that she needed, but it took 3 weeks for her to get stabilized enough to travel with a registered nurse, and it was basically an air ambulance situation. And then she was in the hospital for a month when she got back here. It was a pretty bad situation. But
corporations pay for that, I guess that's my
well,
if I worked for IBM or just pick a company and I was doing business on their behalf, they would cover that before I went, or would I have to ask them?
well, I would certainly ask them, because you would want, at the very least, a card with you. Because a lot of countries, if you get sick in that country and you can't provide evidence of payment, you don't get treated. So that you've got to have some kind of evidence that you can pay for treatment before they will treat you in many cases. So I can't imagine that IBM wouldn't have a specific policy with given the people all over the world that covers that. But they certainly should have provided you with a card so that you can get the coverage that you need and show, a payor a hospital that you have coverage. That's it, for sure.
I think I have a follow-up to that question, actually. So thanks, Mark, because now you got me wondering. So I drive rental cars for my job all the time. I cover a lot of ground. I'm always driving it, and I'm under the contract of the company that I work for, right? And then I also then sort of parlay that relationship with my rental car company into my own car rentals, right? But if I were to go overseas and use that same rental company, for example, I was just in Mexico and I saw Enterprise and National, those are who I typically use, what sort of car insurance would I need relative to my insurance I have here? Should I buy separate car insurance internationally? If I'm using the same relationship that kind of ties back to the contract for my employer, does that give me any coverage? What are the considerations there?
Well, if you're traveling on business, I would usually what we recommend is that clients have a vehicle usage policy that applies also internationally and give you specific instructions, which gives you specific instructions on what you need to do. So, this is a big area where we see a lot of claims happening with people traveling on business in foreign countries. And so what we tell them to do is assuming they have purchased the international policy, right, the package policy, buy the local compulsory limits from the rental car company and buy the comprehensive coverage and the collision coverage. But another thing I will recommend that you do is fully look around the vehicle yourself. Walk around the vehicle and to make certain there's no existing damage or any damage has been marked, and check that out. If you have the foreign policy, it applies in excess of the minimum limits required in that country. So that's why you need to buy the minimum limits locally. And that's easier at claim time. But what we are seeing with rental car companies now, you turn the car in, you think everything's good, you didn't have any accidents, you didn't see anything happen, and they come back and with pictures of damage to the vehicle and come back against you. And we are seeing that in other countries especially, we're seeing that happen. Because insurance companies, if they don't have proof that you didn't damage the car, they don't fight it. They pay it most of the time. So just so you know, if they don't have proof, like pictures, and if I see damage, I take a picture of it with my phone. And so this is unfortunately something that's happening a lot. So that's a good question. Can I tie into something that Katie said, a couple of things that she said? She talked about the customer who had a fraudulent situation, or actually you guys almost had a fraudulent situation. And that's something that's called social engineering fraud. And people think that maybe employee dishonesty will pay for that kind of situation. And it doesn't, because it's not an employee. It's not your crime policy who caused that. It's an outside source. So what that would be, and again, that's called social engineering, and it's become very sophisticated, as Katie indicated. You need an endorsement to your cyber liability policy for that type of coverage, but you can, with many insurance companies, they will provide that coverage, and it's becoming common.
Ellen, you touched on regulation a bit, but Katie, I know that there's a lot of growing regulation in the world that you're involved in. Can you talk a little bit about, so you mentioned, for example, smaller companies engaging in foreign currency risk management, but talk a little bit about the changes to the regulatory environment and how that affects companies that want to risk manage.
Yeah, we banks are obviously not immune to any regulatory changes going on in the marketplace for sure. One of the things that is becoming a real big hindrance to companies doing any kind of risk management associated with their currency risk in their business has to do with size limits. So the Dodd-Frank Act, I'm sure most of you are familiar with it, came out of the financial crisis, basically tried to limit the sophistication level that a company has to have before they can enter into any contracts. And while that is, it's got its heart in the right place, I think that there are some issues surrounding it. Like, for example, there are certain limits onto the companies that can actually hedge their contracts. Some of those include having 10 million or more in assets on their balance sheet. Some of those include having $1 million or more in net worth, either by the owners of the company itself, those kinds of things. So it does prohibit some, small businesses from actually managing their risk exposure. While I know that tried to get a little bit at making sure that banks weren't selling products to people who didn't understand the risks, and I completely agree with that 100%. I do think that it has a little bit of hindrance to smaller businesses trying to manage their risk, but overall, there are regulations surrounding the size of businesses that can hedge the types of services that they can hedge. But the nice thing is that very simple product, that forward contract that I was talking about, is available to any employee or any business that's deemed an eligible contract participant, which has at least 10 million in assets on their balance sheet, or has at least $1 million in net worth in the business, between the business and the owners. So depending on the situation in the company, it is possible to do that even as a smaller business, but there are kind of lower thresholds that you have to deal with, plus the small tree of documentation that we have to send you. But